Over the past 48 hours, whales moved roughly $228 million worth of Bitcoin to exchanges. Kraken and Coinbase specifically. That's net selling pressure. But here's what makes this interesting. Funding rates on Bitcoin just went negative. Shorts are paying longs to stay open. Those two signals are pulling in opposite directions, and that tension is the entire story right now. Let's break it down. Bitcoin is sitting at around $69,000. The spent output profit ratio is at 1.0, meaning holders selling right now are doing so at almost exactly break even. No profit, no loss. The net unrealized profit and loss ratio is at 0.21, which puts us squarely in the hope-fear zone of the cycle. Market value to realized value at 1.27 says Bitcoin is near fair value. Not overheated, not deeply discounted. Meanwhile, Bitcoin exchange reserves saw over 33,000 Bitcoin flow in over the past 7 days. That's supply arriving at exchanges. Potential sell pressure building. Coinbase premium is negative at -6%, confirming US side selling. But institutions haven't fully left. Bitcoin ETF flows over the past 7 days total positive $327 million. 4 inflow days versus 3 outflow days. So institutions are still net buying through regulated vehicles while whales dump on exchange. That conflict matters. Options tell a similar story. Max pain for the nearest Bitcoin expiry sits at $60,500. Price is just below at around $69,000. That's a strong gravitational pull upward. But the put-call ratio on that expiry is 1.55. Very heavy put buying, meaning options traders are hedging aggressively for downside. Here's the thesis. Bitcoin is range-bound between whale selling pressure above and institutional ETF buying below. If ETF inflows continue and whale deposits to exchanges dry up, this resolves toward around $71,000 resistance over the next week. If ETF inflows flip negative for 2 consecutive days, support at around $65,000 gets tested. The deciding factor is whether that Coinbase premium flips back toward neutral. That signals the retail selling wave is exhausting itself. Now the signal's firing across altcoins, and there are a lot of them. Ripple, 71% of traders are long right now, extreme crowding. Our signal system detected this condition. Crowded positioning above 65% has led to price drops within 14 days in 59% of validated cases. Funding is slightly negative. Support at $1.32, resistance at $1.48. Open interest dropped over 4% in 24 hours. If $1.32 breaks this week, that crowded long position unwinds fast. Binance Coin, 70% long with funding at essentially zero, the 3rd percentile of its 30-day range. Our system flagged the crowded long condition, same 59% validated hit rate. Price sits at $629 right at resistance. Support at $620. If longs don't get relief soon, a flush towards $620 becomes likely within 2 weeks. Fetch AI has a compound bearish signal. 2 independent bearish indicators align simultaneously. Taker ratio at 0.88 showing seller dominance, plus open interest surging 23%. That combination has preceded drops 61% of the time in backtesting. Price at $0.2153, support at $0.2150, almost no cushion. A break below opens a move towards $0.19. Tau is flashing a post-pump signal after gaining 48% in 14 days. After rallies above 30%, corrections followed 59% of the time in our validated dataset. Current price $268, support at $263, resistance at $280. Solana, 70% long, funding deeply negative at -0.03%, shorts paying. That's the 11th percentile of its 30-day range. Support at 80.26, resistance at 91.68. No active signal yet, but for a bearish trigger, we'd need long crowding to hold above 70% while open interest rises. Watch that combination. If this range-bound thesis is wrong, the first sign will be ETF flows going negative for 2 straight days combined with whale exchange deposits accelerating. That's full capitulation across both retail and institutional channels. And it means around $65,000 doesn't hold. That's all for now. Fresh data and new signals. Every single day, Fortix Crypto